access at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, and this is the Friday, the 24th edition. Gosh, time's flying in January. It's almost wrapping up. We're looking at the Dow down 133 at 44,431. That's fantastic. What a day you had yesterday. Breaks right through to all the different resistance levels we've got still in leg B. I say to subscribers, there's a really good chance we're going to make a peak B today, and we should still go to a higher C and then a D. So that's really important from that 41,844 low of the 13th of January. Look at this in 1, 2, 3, 4, 5, 6, 7, 8. In about 8 or 9 sessions, we've gone from 41,844 all the way up to yesterday's high was 44,565. Outstanding. S&P is pulling back a little bit. SPX, there we go. S&P made a higher high in leg A, all-time high at 6,119.37 right now, up 78 cents. Did go to 6,128. That's amazing. And this is still, I don't know how else to call this, because the stochastic's fantastic at 97. The MACD is great. The relative strength is fabulous. It's not overbought. It's just looking really good. The on-balance volume is a tad overbought. Spectacular move in the weekly chart. Now, I've got it written as an F. I don't think this is going to be an F, but that might be an alternate count at this particular point. Reason is the starting point was way down here, right there at 5,000. This is 5,119.26 back in August of 2024. And the 9-period moving average is still really strong. So this is fabulous, and the monthly chart is very strong. Let's go to the QQQ. That was good yesterday, but actually a little weaker than the others. Today it is down. It's unchanged as we speak, or down 6 cents at 532.59. Didn't quite make the all-time high. Days young. We did make a high 3 sessions ago at 533.82. And today's high is 533.79. Oh, it's just an eye blink away from a leg B. Weekly chart's improving a lot. Monthly chart is very good. IWM. Now, that's going to be the test. The IWM is down 53 cents today, 228.76. It's been struggling right at the Chapman Wave inside track repellent zone. Weekly chart is improving, still went all the way down, and yet their 9-period moving average did not close green. And that usually is a very good sign to say there should be a spring to the upside. I want to go to the SMHs. That's the SMHs, the Semiconductor Days Technical Friday. And I can't take, I'm having a tough time. I have to use the breaks to look at the questions coming in. 266.43 down $1.42. This is a peak C, having made a recovery high, not an all-time high. That's a 283.07 for the SMHs, the semiconductor index. Very nice breakout of this mini rectangle into the larger rectangle in the weekly chart. Let's go on to the gold. It's going to be, I haven't checked gold in a little while. It's up 24 to 2,789. So it's a little bit away from the all-time high. I usually have a tough time when I type this in because it's a continuous contract, and that gets smoothed out, so the price always changes. The date is always exact, and the chart is always exact, but the price might be smoothed out. So 2,825.9. Oops, I missed that. 2,825.9 was the all-time high back on the 1st of November. There we are in leg C in the weekly chart, trying to tackle that. Silver didn't have such a good pattern, but today it's up 41 cents at 31,000.25. Nice action, but still much weaker than gold. Let's go to the dollar. DXY, the dollar, I had mentioned, had made a peak F at 110.18 and looked like it was going to take a breather. Certainly has. The low today is 107.28. It's trading at 108.19. Weekly chart peak C. There's no other way I could count that, so I suspect we're going to go to a high. Look, that almost looks like the semiconductor pattern right there, and at some point should work its way a little bit higher. Let's go to the high-grade copper, and that's what I mentioned to subscribers this morning. High-grade copper had a very nice rally. We're going to be watching that to see if that joins in the party. It hasn't really yet. It's gone back to the magnet of the 200-period moving average. It's at 432. This, to me, is really quite important. Yields. Up to 30 seconds at 112 and 30 seconds. Just nothing to see here. That is a leg B, a peak B in the daily chart. And in the TLT, it's the same thing. This is a peak A in the at 86.97, up 14 cents. Look at that arch formation. This is really a tough pattern. Lowercase h going monthly going to lowercase m. So the TBT did pull back from that high, that double top high in the 38s. It hasn't gone back there. So this is a work in progress when we're looking at yields, because we want to see those yields just based on all the other aspects. It would be good to see yields at least pull back a little bit. I want to go to crude oil. The crude oil was trying to rally earlier on, CL, and it's now down 29 cents. It's really struggling. It hasn't broken down yet, but it's not good looking at 74.32. So with that said, I want to look at the VIX index, the VIX, VIX.X, there we go. Trading down 27 cents at 14.75, and that's still saying buying is coming in. And look at that, 28.32 was the high back at that high, that Fed scare high on the 18th of December, pulls back sharply, then rallies again, goes to 22.04, and that was on the 13th of January, the day that the market made its low, and pulling back quite sharply. So I wanted to go through those, and the only thing missing, of course, is Bitcoin, and Bitcoin right now is trading, it's actually trading up sharply, up 2,405 at 105,820, holding very nicely. And I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, Technical Friday, the 24th of January. Larry is doing his workshop. Should be very interesting as always. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. I'm just checking some of the questions. I've got them right here. Just writing it down. Sorry, there's no picture. I've got the background is a little bit too WL. Let me just get that. All right. And yes, looking for a good entry point. Okay, we've got that. All right, a couple of questions came in. I just need to do this one first, and that is the question on Kweb, KWEB from GT, and that is had call positions. Excellent, because it's up 47 cents at 29.91. I believe this is a Chinese internet ETF. Monthly chart doesn't look very good. Weekly chart doesn't look very good, but the daily chart says, hey, the 9-period moving average today just crossed positive. That's a good sign. And the MACD is good. Stochastic just hit 82%. That's a good sign. Relative strength is, it's good. It's flattening out, but it's good. That 200-period moving average is a magnet line, and that magnet line is right here at 29.38. And it's trading right now at 29.89, so it's away from that. And it's very surprising that it's such a big move, because the high on the 21st was 29.97. Uh-oh, gonna sneeze. Excuse me. Right into the microphone. 29.97, I said. And today's high is 29.99, so that just started a leg C. Now, I'm usually not very happy. I should be happy with calls there, mister. But I'm not very happy if you go from a low in the 27s and you just move up. It is 10% because the price is fairly low, but for a leg C to start, look at this. You went from a peak, from a trough back in end of November, beginning December, in the 29.80 area, and you scream your leg C, which then fell, was up at 34. That is a leg C. So this is either now very diligently working to the upside. So all I can say is you've got the calls, congratulations. You worked them the way you want, but you did what you wanted to do. Very good. Question came in FCX. I think I'm going out of term, but that's okay. FCX. So when I looked at the key copper stocks last night, I thought, oh, wow, what a terrible move that was. I mean, FCX did exactly the opposite of the other one. It was trading at the 40.85 level at a peak C, had an ugly candle the following session. Yesterday, it took a dive, gap down, and went all the way to the 36s, and today it is down 30 cents at 38.20. But if you look at the weekly chart, there's that large H to M-shaped pattern, which reminds me we're going to go to Hymax in a moment. And then it took out the low that was made back in May in the 36 area and went under it. And so far, within 2 sessions, it's gone lower. It's within 1 session. It went below this week, yesterday, and now it's trading higher. So it's a work in progress. Now, the entry point for FCX, I would say, is this. Right here at 38.18, I would just put my foot in the door. That's all. It really needs a lot. This candle right here, like a little, in a certain sense, Chapman Roman candle going above the high of yesterday, says at any point in the next 2 sessions, if it trades for 40 minutes below 37.50, is liable to retest the low of yesterday, which was FCX's Freeport McMoran Inc. Copper and Gold, the low of 38.46. So this actually is very good action, even though it's given back some of the intraday gains. But personally, I would wait. Whatever the high is today, I would start a position with a higher high on Monday or Tuesday. This is, to me, is just a little too hairy. If you put it together with SCCO, it's not your question. Your question was Freeport McMoran, Southern Copper is usually the Basil is the one that really does the best. You can see even here the chart is a much better chart, and it did the arch formation, and it successfully held off going below the low that was made back in, I think it was in July at 89.06. So that one is acting a little bit better because all the consolidation is trying to tackle the daily 200-period moving average of 100.22. So you asked me a question about FCX. So all I can say is, depending on your risk, maybe you can wait a little bit. But if you want, just start a little position. But if it breaks to the upside by Monday or Tuesday, we can do it again on Monday. If it breaks to the upside, I say, okay, now it's ready for at least a bounce, and you can go only one step at a time because that weekly chart, the magnet of the left side low of the arch pattern is still in place. So I hope that helps you there. That question came in about HIMX. Stock me. Oh. This is fantastic. You know, it's funny enough, I did this. You asked me the question. I said, made it a peak C, and then I pulled back, and then under that it made another gray ABC, and today it's got an overlapping wave that started 3 days ago. It's a huge move up to 13.85. It's up 17%, up to at 13.85. And you did mention to me, and you said, here is peaky. You said, here's our old Hymax Technologies, display drivers, touch panels, etc. So this is excellent action. This is part of that whole display thing. Weekly chart has gone to a leg. I don't want to do this too quickly. That was an A, and that was a B, and then it gave back, and then under it goes gray A, gray B, overlapping C, and now it's gone to a D. This is, I don't know how it's going to come back to the under 11 or 11.20 to 10.50 where I would really like to look at it for a much longer term. But this is excellent action. So congratulations. Where's the next? I don't want to go there at this particular point by saying that the 16s where it was when it broke down back in 2022. So we had it quite a few years ago and did very well. And it's been not off the list. I've just kind of had it in background. I don't want to say that's where it's going right now because I need to see, on a pullback, if the pullback in the next 3 days doesn't go below 12 and it's a 13.87 now, then absolutely that left side high of 16 point, little double top there, was at 16.50 back in December of 2021. This is now over 3 years ago. That becomes a magnet. Yeah, I am going to go. That's what I'm going to say. So if at any point this coming week it starts to trade anywhere in the, I'd prefer if it pulled back once, had a peak D, and then started a new move up into the 1435 area. That to me would be very good action. All right. Next question came in, and let me just do this here. Oops, I didn't want to do that. I just needed to have a quick look. So you remember, we were looking at this, and I said, these have to start working. The relationship of the S&P, that's the S&P 500, to the IWM, the Russell 2000, the small caps, has to see, this is my thinking in terms of having some kind of follow through that broadens the market. The Russell 2000, which we are still long from about 202, it's at 228 right now, is already gone to 244 back in November. That has to get very quickly to the 232 area. So that's a work in progress. That's the relationship I'll talk about when we return for the financials, the XLF.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, You choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Good morning, everyone. Basil Chapman remotely doing the Tiger Technicians Hour, Technical Friday. So let's just look. The XLF made a peak G. That's the S&P Select Financial Spider Fund. Way back in, it was either the beginning of December, late November. That was end of November, right there on the 28th, was it? 27th. It goes to 51.62. Let me just type that in, 51.62. And 51.62. And then it takes a dive. It goes to 47s. Wow. Now it's trading at 50.77. And what I'd said is we've got a rather broad portfolio at this particular point. We've added some, just got taken out by pennies and added position to our the IWM. Yesterday, I could have got back in. I was just, it was a shame because then the IWM closed at the highs. It's digesting. I think there's plenty of time if I want to get back there. But so we're very broad, one of the broadest portfolios we've had in years. So within that context, so for the XLF, for the money center banks, we have Bank of America. Bank of America is still doing very nicely. It's up today 37 cents at 46.69. I decided that we wouldn't go into JP Morgan. We'd go into a laggard because the laggard had much better percentage potential on the move up. And Bank of America should also increase because it has the public. That is the sector that is Merrill part of it, the brokerage. All right, so that's the XL. But the KRE is the regional bank index, and that regional bank index, to me, the broadening of the market has to see a play in the regionals because the regionals are part of, I mean, that's integral to the economy of the United States. You've got, they call them the smaller banks, but really some of those regional banks are huge. I mean, if there was another country, they'd be the money center banks of that country. So I consider it important. And the 9-period moving average did cross positive. It's trading at 63.41, up 54 cents. Kind of struggling. The MACD is at 85%. That's good. That's the stochastic. The MACD is good. The radio strength is improving. The weekly chart had that big pullback, and the 9-period moving average did not go negative. And that usually allows for quite a good spring to the upside, and that's exactly what we're getting. Monthly chart did make a peak D. I never like peak Ds underneath the major high, which is back in January of 2022. That's 3 years ago. That's 78.81. In that time, it's plunged to the 34.12 level back in May of 2023, and it's gone peak A, stair step, sharp pullback. Leg B, stair step, pulls back sharply. Each one had a big green spike to the upside, and then it took 2-3 weeks to digest, making higher highs and then finally a higher high and higher lows, and it goes to a D. But that D at 70.25 on the 27th of November is way underneath the 78.81 high. That says on a technical basis, this needs, yes, it's working its way higher. But even more importantly, the technicals have held well enough in the monthly chart for the MACD to be good, the stochastic to be still at 78%, not at 80, but 78%, it's pretty good. But that 9 over the 14 is really good. So that means going to the second week of February, it's really important to see this particular index, KRE, S&P Regional Banking ETF, move pretty sharply. I would like to see that it takes out this whole cluster of resistance at the 60, starting at 63.29. Well, 63.29, we've already gone above that. 64.90 is the next one, but it's really this cluster right here that takes you into the 65s. Is it wishful thinking? Well, at this particular point, a lot of things are pointing to the early takeoff with the two gaps having not been filled. I would give it about another 2 sessions without taking today's low of 62.37 out. I would like to see it tackle the high that was made on the 21st of January at 64.25. So I said I would, yesterday I said I'd do a little work on that, and that's what we're looking at. Next question, you remember Amazon made that round number high and had that very sharp pullback? It went from 233.00 on the 16th of December to the low a few days ago of 216.20 on the 14th. And now it's trading at 234.92. So it's above 233 point. As long as you take it out by a penny, that particular resistance is no more. You have to look at other highs. Well, other highs, we're looking at Amazon breaking the monthly chart into a leg D, the weekly chart a leg E. All the technicals are pretty good. Let me just open this up if you don't mind. I'm going to do this right here. The all-time high in Amazon was way back, and it's been split. Well, the last one was 188.65 back in July of 2021 before it plummeted to 81.43. So this is kind of open territory for Amazon right now, looking very good once it takes it out. But if it does go in the next 2 weeks, no, I'm not going to say 2 weeks. If it does go, today's Friday, by Wednesday afternoon or Thursday morning, if it's able to touch 240, then that 233 level becomes a support level. That's the way these round numbers work. Round number, you remember there was a little baby stock. Somebody might remember going to a little tiny store some years ago and taking in your DVD and giving it back, and then getting another one, taking it home, putting it into, and then playing it. It's just a little baby company called Netflix, which is now trading at 979. The low in May of 2022 was 162. I would say that's a pretty decent rally. And it made a round number 999 high when it came out with earnings and gapped up from it was tootling along in the 871 area. Whoosh, it goes up to 999.00. That was on the 3 days ago. That was Tuesday, Wednesday, Thursday, Wednesday, Thursday, Friday, yep, Wednesday. And here it is at 879.00, down 5.86. But from everything I've got, this is a peak B. It should go higher. And when it takes it out, depending if it can get to 100. So if it can get to 1,010, that 1,000 level is starting to become support. And that 99 round number becomes some kind of support short term. That's the way I would look at that. I'll be right back to the number of stocks that I was asked to look at, and I'll get to that. Basil Chapter tonight, this hour, the Dow is trading down right now. Yeah, I missed it. The Dow is trading down.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Basil Chapman. So we're looking, down about 119. We were looking at different. I was looking at this quite a while ago. I did a lot of work on it, and I can't recall who had asked me or whether it was one that I love. The symbols that either represent what it is, like something, let's see, what was that? Wheat is W-E-A-T. In this case, blue owl, capital, has owl as A-W-L is the symbol. It's up 51 cents at 26.54. And was it a question on where to enter? But I did a whole lot of work on this owl. Let me just see. Okay, I did that. Just remind me to get to the GTO. The question there is, that's a Chevy Impala. I got a couple of questions about 1960s cars. So before I go to Al, let me just say, very, very, just really, as a teenager and then later on, I used to look at automobiles in terms of excessivity. And in the 1960s, when the bumpers of the cars weighed more than the car itself and were more elaborate, I used to think, God, that's excessive. And then, of course, in 1969, that was a pretty major top in the market. And over the years, I've looked at automobiles in that way. And I think that's another thing. If we look at design, designs today are becoming really important, because there was a period where the accountants really produced the cars. They forced General Motors and Ford to use parts that were just unacceptable, like plastic parts and engines, etc. And they were not very good-looking cars at all. Now things have come back, and now you're starting to see style. And style, I think, is always very important in the sense that it tells you about the vernacular. It tells you about the general public, what they're interested in. And there's a certain point where the style becomes, and I always used to chuckle because Cadillac was the premier company that they'd produce a car that was, in all the years, only for the 1955 era, most of the time the quality was never what you would expect, say like a Rolls Royce or something like that. It was just a Cadillac. It gave it a little status because of the showiness. And then they would add some glitter to it. And Cadillac over the last few years has got they were the ones that have the long single line of lights, etc. So if you look at the automobiles today, especially when there's a whole new generation of EVs, style is becoming really, really important. At a certain point, style is going to become so obsessive in terms of the next iteration of whatever the product is, that it'll give us a clue as to when there's going to be a major top. We're getting close to that, but we're not there yet. So I went off at a little tangent there only because it was in the den. They were talking about cars, and it was a 1960 Chevy Impala, I think it was. And those are also kind of nice names that they used to have. We don't have that anymore. We have GT59 or whatever it is. So our spectacular move from the 22 level to 20, where it is now at 26.59, up 55 cents, breaking out of the weekly chart. I had done a Fibonacci analysis quite some time ago, but I drew in the Chapman Wave instant restart. But you know what's interesting is that double top high. In November, it had a high of 25.03. The very next month, it had a high of 25. So that becomes an E. This becomes an F. But because you've got an instant restart, this could become a technical Friday. This could become an F/B. So I always put that in. Once I've got that instant restart, that means you go to a peak D in the Chapman Wave methodology. And within 3 bars, this was 2 bars, it breaks to a new high. Now, the higher it goes, the greater the chances are that it's going to go to a G, then fail, and then come back up again, like a U-shape or a V-shape pattern, go to a D, and that's the one you've got to be really careful of. So this is fabulous action. Now, I don't know whether this applied to the same question, where do I enter? This could be a continuation of peak C1, C2. In other words, if this goes to a peak, and then there's a pullback, and then it goes, and it doesn't take out the original starting point low, then it goes back, and within pennies, it's usually got to be really close. In the futures, I use it a little bit wider, but it has to be real close. I call it a peak C, and I always put a plus on it, say this is acting like a D. Expect a pullback, and at any point, if you break to a new high without taking out the left side low, consider that that's a continuation pattern. So technically I should, because that's the rule of in the Chapman Wave methodology, I should go D/A. All right? Everything about this, with this, you see that aperture in the MACD, the moving average convergence, divergence. See that 9-period moving average, that 9-period differential is called, how wide it is away from the red 26-period exponential moving average. The vertical gray lines are called the histogram. That's just gauging the distance between those two lines, the aperture. Look at the relative strength, strong. Look at the stochastic at 96.67%. You never get to 100. We once had, I thought I took a picture of it, and I wanted to preserve it because I'd never seen it before. And 100%, I think it was 100.35 or something. That was amazing, because normally you don't get to 0, you don't get to 100, but those are the outer bands. Anyway, we're looking at the stochastic flat at 96.90, and the on-balance volume's a tad overbought. This is fabulous action. Where would I get in? Wow, I think this is an all-time high. I'm almost pretty sure it's an all-time high. All-time high? Yes, this is an all-time high. It once had a low back in 22 in the $8 level. So I'm going to suggest stocks that make new all-time highs as markets are moving higher tend to stay on the all-time high list. If you put in a small position right now and expect a decent pullback, I don't know where the pullback is because there's still only a single leg to the A up. You remember the rule of thumb is you can have a single leg A failure pattern. This doesn't look like that at all because there's just too many bars. 1, 2, 3, 4, 5, 6, 7, 8. So any one of these could become support. So if start a little position right now, I'd prefer if you even looked at options. It's trading at 25.58, 26.58. I wouldn't mind being in the money with a January, February. I'd even go for a February call, but that's just another way to look at it. But in the meantime, get your foot in the door right here at 26, and I'd say an 8% risk on a small position because it's really the feeder position. I would take that because the way it's broken out in the weekly chart, that's F/B. Remember I said alternate count sometimes? Well, then it goes to a C. You remember that double top that we were looking at right there? So that's the double top by 3 cents because it goes to 25.03 and the next high 3 weeks later was 25 round number, and we've just pierced that decisively, so that's a leg D. So I wouldn't get too carried away because it really is extended in a certain sense, looking fabulous. Just a little bit if you want a kind of a trading position, or you could even say I'm going to wait for 26.53 right now to give back a little bit, maybe start a position at 26.20 with a 2-point stop. And this, you tell me if you did it, and next week you'll look at it. All right, we'll be back. The Dow is right now.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So a question came in about Devon Energy. It has fabulous move from the 31 area all the way to 38, and now it's pulled back to 35.86. I have a tough time with this because that weekly chart is really struggling. So if you're in it and you're in it lower down, I would just say if it takes out 35 support, I'd take a little bit off. I'd much rather be buying a little bit of strength. So if you can get to the 37.35 area, it's a 35.83. You give up about 1.5, 2 points. I'd much rather be buying because the 90 is way over the 14. The MACD is good, but the stochastic pullback after being very strong, under 80%. And when it does that, you've got to be very careful that the price Well, 9 is still strong, but you've got to be careful about price because price can be affected. So with that said, I'd be a little hesitant to do anything other than wait a tad. I'd rather be buying some strength. We'll look at it again Monday. Next question came in about IMRX, and let's see, Immuneering Corporation, I believe that's what it's called, pancreatic oncology. It had a huge spike right about about 2 weeks ago. It went all the way from the 2s up into the 3.60 area. Now it's down. This is because it's in the biotech area. You can see all these. I talk about this all the time. You see these inverted spikes, the long wicks, and the sharp pullback at the close and the weekly charts. All I can say, if there's news coming out, 2.47 is the 200-period moving average. If it closes above that, that says, okay, this is going to be another one of those spirals to the upside. Right now, it's just kind of sitting there. So the other one was Devon DV. Did I not do this? Devon Energy? Yes, I did. So Devon Energy, I'd rather be buying strength. One other thing, CEG. And as we're about to wrap up, you're going to go to Steve Rhodes. Should be a great show as always with Steve. Constellation Energy. This is a fantastic company. All-time highs, looking very good. Check out my opening call, my daily newsletter. We've had some really nice positions there. We did manage to get the low in the Dow on the 13th at the very low and holding that position a little bit aggressively. And we'll see what happens next. And at this point, with the Dow down, taking a bit of a breather, it is down 112.